If you want to be a profitable day trader, then this is the must watch video for you. In this video, in 4 simple steps, I'm gonna show you how to be a consistently profitable day trader. Now maybe you are trying hard for a long time, not working out. This video will help you to eliminate the things that you may not require to be a day trader, but maybe you are giving a lot of time, and also will help you to understand what exactly you need to pay attention to be a day trader. Maybe you even not paying attention so far. So make sure you stick till the end to see step-by-step guide to be a profitable day trader. Now before I begin this important day trading course, make sure that guys you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. So now I will go through all the steps one by one, and I will explain clearly how to attain them. Make sure you stick till the end, don't skip any part, as this is going to be a complete guide how to be a profitable day trader. Now first step in this journey is to learn the foundation. Keep in mind, foundation is the key. If you build a house, if it doesn't have a foundation, it will never exist. Now what is the foundation? The foundation to be a profitable day trader is to learn 3 most important part of trading is market structure, liquidity, and price action. So now I'm gonna explain one by one what is market structure, liquidity, and price action. What is now in a simple market structure? Market structure is the GPS of the market. Imagine that you are in a city where you don't know anything, where to go, which way to go. Can you navigate the city? Not at all. You need a map or GPS, or someone needs to guide you which way to move on. Similarly, market structure will tell you which way the market is heading. Now what is a market structure? If we simplest to explain, the market structure is the way the market moves. Now if you look at a market will move, create an impulse either to the upside or downside, and then will come back for a pullback, and then it will try to create another impulse in an uptrend, and it will come back down for a pullback, and then it will create another impulse. This is called a market structure. Now a market structure in an uptrend, when the price creates series of higher high and higher low, which is an uptrending market structure. In a downtrend, just the other way around, the market will create an impulse, will go up for a correction, and again it will create an impulse, will go up for a correction. So this is how the market moves. This is the way the market moves. And the other way the market moves is if it is in a sideways, the market will create a move, will come back down to the support, and will come to the resistance, and this is what we call a sideways market. So the market either go up, down, or in a sideways. There are no other way that a market can move. Why it is so important as a day trader, you need to know, because you either buy or sell based on market structure. If a market in an uptrend creating series of higher high, higher low, you will be buying, right? If a market in a downtrend creating series of lower high and lower low, you will be selling. The simplest way to know either to buy or sell in a market. Now let me show you a real chart example so that you know what is in fact a market structure and how to navigate them. You can look at this chart on AUD USD in 5-minute chart. Now you can see there is an impulse, a strong drop followed by a correction, another drop followed by a correction, and another drop followed by a correction, and another drop. So if you look at this market, you easily know that this market is creating series of lower high and lower low. which is a downtrending market structure. Once you identify the trend, when in a downtrend, we will be looking for, as a day trader, only selling opportunity. This is the key to know which way to trade. Now, most traders don't understand the market structure and they just randomly buy or sell and lose money. So make sure you understand what is a market structure properly, so that you are not making the same mistake that most traders are doing. Now let's look at an uptrending market structure. As you can see, the same instrument, AUD, USD. Now if you look at this market, you can see there is an impulse correction, impulse correction, impulse correction. So the market is forming typical uptrending market structure, creating series of higher high and higher low. So when you see a market in an uptrend, we will be thinking of buying only in that market. Now let's look at an example of a sideways market. Okay, so let's see this example on GBP JPY. Now as you can see, whenever the price is falling to this support level, the market is bouncing off to a certain level to the resistance, and again the price has come back to the same level of support, has a bounce, and again the price has come back to the same level of support, had a bounce, and we see that every time the price coming to that level, having a bounce, making a solid support level, which what we call a sideways market. Now in a sideways market, what we will be waiting is for the price to come to a support or resistance, and when the price in a support zone, will be buying. So by understanding the market structure, you know exactly what to do to buy or sell. Now let's look at the price action. Okay traders, so the next thing that as a day trader you need to look at is the price action. So what is the price action? Price action is the representation of the buyers and sellers activities in the market. Now if you look at this market on GBP USD, in any time frame you can look at the price action. This is the 4-hour time frame on GBP USD. So let's look at this individual candlestick pattern to see how to read the price action. Now what happened with this candle? You can see that the market opened here. Once the market opened, the sellers sold this market during this time period, created this lowest price possible in this period, and the price has gone up, closed above, and created this long candle. That is what we call the price action. A price action is only the visual representation of the transaction between the buyers and sellers that we can see in the market on the chart. So as a day trader, it is very, very important that one must know the price action, how the price action works, because all about staying with the winner. So if you know that who is in control in the market, then you know that actually who is winner in the market. So this is very, very important to know that as a trader, you know that price action. The third thing that in the foundation as a trader you need to know is the liquidity. Now this is one of the most important part that I use in my trading. As you have seen, mostly I talk about the liquidity. What is liquidity? Imagine that a car, the most expensive car in the world you have, but doesn't have fuel in it. Can you drive that car? Not at all, right? Similarly, if there is no liquidity in the market even will not move like a tortoise. You can see that. So it is very important that you know where is the liquidity. Now, if you look at the same candlestick pattern that I am showing on GBP USD, this is a bullish candle that has a massive liquidity. How do you know? Let's draw this trend line in that area. Now with that trend line, what we saw that the market was respecting this level, the buyers buying from here, again respecting this level, buyers buying from here, again respecting this level, buyers buying from here. So once you see the market, the buyers are buying continuously, the traders start to believe that from this level there will have another bounce. So everyone started to buy. So when everyone started to buy, there is a huge stop loss below this level. Now when there is a stop loss, for the buyer's stop loss is a sell order. So once there is a lot of stop loss in that area, this is where the liquidity. And once the market has come to that zone, the liquidity is triggered. And once the liquidity is triggered, every buyer's stop loss is a sell order. When there is a lot of sell order, the bigger investors bought from that zone and the market started to go the rocket sky. So by understanding where the market is heading, where is the liquidity, will give you an extra edge in the market to see which way the market is heading. So now you have understood the basic of market structure, liquidity and price action. Okay, now let's look at the second step to be a consistently profitable day trader. Now the step number 2 to be a profitable day trader is learn proven back-tested trading strategy. This is very important. I know that most trader, even me, when I started out in the beginning, I was just randomly buying or selling in the market. Guys, keep in mind that you need a back-tested proven strategy. Without a strategy, trading is gambling, and a gambler will never be profitable over the long term, as there is a spread. Even if you are gambling with 1-to-1 all the time, after 100-200 trades, you might be winning 50%, losing 50%, but still you will be losing money. The reason is you have to pay a commission, a spread that will make you a losing trader. So it is important that you have a proven, back-tested trading strategy. So what is in fact a trading strategy? A trading strategy is a set of rules that you need to satisfy to enter a trade. Now it is important, otherwise most of the time you feel like, okay, this is a trade here, there is a trade here. If I show you in a real chart, that you might feel like, well, there's a trade here, there's a liquidity here, and there's a doji, and there's a pin bar here, and you start to see a lot of trades. Now if you look at this market, okay, there's a long wick candle, there's a trade here, you might see, okay, there's a bullish candle here. So if you don't have a strategy, you definitely started to see a lot of trades that is not there. Now what is a strategy? If you look at this, our TF strategy, this is our TF strategy or trend following strategy. This is also the indicator that we use to find the trade. Now you can see that only selected area that we find the trade and rules can be programmed. So we programmed our TF strategy, one of my favorite trading strategy, also in a Pine script, and this is an indicator giving me exactly the sell signals. And as you can see, wherever it is showing this sell alert, in fact the price started to drop, right? Massive drop happens, and this trading strategy is needed to know exactly which candle you should be entering. Now if you want to learn that kind of a strategy, also you can join us. There is a link in the description area. This indicator also available for all the students who are trading with us in our Forex Trading Wizard Academy. To access this, you can be a lifetime member, and the strategy must be a back-tested strategy. If the strategy is not back-tested, then probably you might not have faith on that strategy. And because of that reason, the strategy that we use also comes with a back-tested result, so that you can rely on the strategy. Now the step number 3 to be a consistently profitable day trader is to learn the proper risk management. Guys, this is where most traders fail. Now imagine that I have given you 2 choices: the best sports car in the possible but without any brake, a 1970 model, maybe your grandfather used to drive the car with proper brake in it. Which one you gonna choose? Now definitely you don't want this to happen, isn't it? So definitely you'll be choosing even 1970 model, your grandfather's car, because you want to stay secure and safe first before you enjoy your ride. Similarly, without proper risk management is driving a sports car without a brake. So then what is in fact a risk management? Simplest way, risk management is to manage your trade and your capital which is at risk in the market. Now it's a vast subject, but simplest way, the most important part of risk management is lot size calculation. And unfortunately most trader trade randomly, buying or selling in one lot, 0.1 lot, 0.01 lot. If you do it day after day, in the beginning that's fine, but if you don't do proper lot sizing based on your capital or percentage of risk, over time it will be very difficult to be profitable as a day trader. Now there are many ways you can calculate the lot size. You can use a lot size calculator in your platform, whatever you are using, MetaTrader 4 or any kind of platform, or you can use web-based lot size calculator. There is one lot size calculator also available in our Forex Trading Wizard Academy website, forextradingwizard.com. Click the link position size calculator, and then very simplest way, you can select the currency pair that you are trading. For example, you are trading euro dollar, and your currency pair, your account currency could be, and then your account currency could be whatever account currency you are using, USD, AUD or anything like that. And then now select your account currency. Let's assume that your account currency is USD, and then risk percentage could be 1%, 2%, whatever percentage you are using. And then the account balance. Now how much account size you have, $100, $1,000, $10,000, you put it here. And then stop loss pip, how many pip stop loss you are using on that particular trade, could be 20 pip, 10 pip or 100 pip. And once you do that, click calculate, and it will give you that how much lot you should be buying or selling. Now this is the most important part of risk management, calculating the lot size. Now I have an in detail risk management video also, I will be linking above. You can watch that to understand full risk management in a single trade or in a multiple trade. The fourth step to be a profitable day trader is to open a trading account with a brokerage. Now you can either trade on a demo in the beginning, or you can trade in a live account. Now there are two ways to learn it. In a demo account you can learn, but it takes little bit of longer time. But if you are trading on the live account, it really accelerates your learning. Now here is the most important part. You need to understand that when you begin as a trader, in the beginning or even before you become profitable, there is a chance of losing money. Now if you trade on a demo account, highly likely that your learning will take time. Why? Because when we use real money in trading, there is emotion behind it, and where there is emotion there is attention, and where there is attention the learning comes in place. So that's why I recommend to use a very smaller account but in a live account. Keep in mind, this is a very important part. You have to use a very smaller account, because chances that in the beginning, in 100% of the time, you might be losing that account money. So depending on your economic situation, I would recommend you to start with a very smaller account, maybe a $10 account, or depending on your situation, maybe a $100 account, and use that for learning purpose, so that once you open a trade in a live account in a very small size, you started to pay attention, because it's your earned money, and you start to pay attention, and you know how the market moves, and your learning become faster than a demo account. Now if you need a brokerage, then also I recommend to use a regulated broker. Now we recommend about trade as a regulated broker. There is a link in the description area, the second link below this video. You can click the link and register for free. I recommend you to start trading with a regulated broker, and also use always a smaller account until you become a consistently profitable trader. Now these are the simplest 4 steps one must take to be a profitable professional day trader. Now, if you want to access all the strategies that we have in our Forex Trading Wizard Academy and also trade with us, learn our strategies to be a profitable trader, also you can join us. There is a link in the description area and also website address you can see in the screen. Visit the website, join us to learn our strategies and also to trade with us. And also watch these 2 videos will be helpful to be a profitable day trader. Thank you. I'll see you soon.